Boglehead investing is something that you hear about a little bit. Different people proudly proclaiming themselves to be Boglehead investors. But what does that actually mean? Well, Boglehead is more or less a shorthand for somebody identifying themselves as someone who follows the principles of John Bogle, founder of the Vanguard group. Yes, the same Vanguard that has the brokerage and the different ETFs. And he's also the guy that put indexing on the map. So indexing is basically if you buy an S&P 500 ETF like VOO or SPY, you're indexing, right? So basically, if you say you're a Boglehead, it probably means you do most of your investing by just passively buying index funds day in, day out. So what is the point of doing that instead of picking your own stocks? Well, I think for most people, it has some benefits. One is that you're diversified right off the bat. All right? You're not making or breaking yourself based on the performance of one or two different companies that maybe make up a big portion of your portfolio. That's definitely a benefit. Now, the other thing is that part of the whole principle of being a Boglehead investor is that there's an international component. You're like the official thing is that there's a certain portion that should be domestic, some international, and then there's like a bond component too. If you look at like the pie chart of what like the official Boglehead portfolio were to look like. So this is the Vanguard Total World Stock Index Fund ETF. It kind of combines both the domestic and the international portion of the equation because, again, it's the total world stock market that's held in this ETF. But if you look at the actual holdings of this ETF, first of all, you'll see that the expense ratio is quite low. I just want to point that out. So instead of a mutual fund where maybe you get charged, a full percent, they charge 0.07% fee of assets under management. So you're not really losing much to fees at all. And the composition is basically 9,500 different stocks in VT weighted by market cap. What does weighted by market cap mean? Well, it means that the biggest market cap is still the highest proportion of the portfolio. So if the biggest slice of your portfolio, if you just buy shares of VT, will be Apple. Okay, second will be Microsoft. Third will be Amazon. So see how a lot of these top holdings are very familiar companies. Google Class A, Google Class C, Facebook, Tesla, Berkshire Hathaway. So you're getting a lot of those popular large cap tech stocks that everybody's crazy about in the first place. But what you're also getting are a lot of companies that have room to run in places where GDP is growing a lot faster than the US. Now, historically, the US has been the best bet for growth, for economic growth. But US GDP growth is slowing down. There's no doubt about that. But there are places in the world where it's just heating up. And hey, if you're thinking that for the next 20 years, America is still your best bet, well, you got a lot of really high quality American businesses right here. But if you think that it's going to slow down and that the rest of the world's going to start to catch up, well, you've got those too. All right. It's just they're a little further down the list because they're not as big as Apple yet. So that's one thing. You've got the whole world. You've got that massive diversification, but you've still got your most popular, well-known companies that you probably, if you were going out there just picking on your own, you'd probably end up with some of these in your portfolio. The second thing is that it sort of takes your emotions out of it and your personal biases, right? Because let's say you personally huge Nvidia bull and you're buying it at these all-time highs, right? And you're just pouring tons and tons of money into Nvidia. Well, if they suddenly crash down, that hurts quite a lot, doesn't it? But if you buy VT, you've got Nvidia in there. It's a small percentage of what you have. And if they went to zero, it would affect VT, but you'd barely feel it, really, right? Because there's over 9,000 other stocks in there that probably will more than make up for it. So that kind of helps a little bit with the emotional swings that you go through as an investor, right? Because if you have a lot in one company and you see it drop sharply, it's going to make you think, oh no, what if this goes to zero? Should I sell? Should I sell? Should I sell? More often than not, selling at that point when your emotions are telling you to sell is a mistake. But it's something that people have a really hard time resisting. It's much easier to sit there and say, well, hey, I've got over 9,000 stocks here. And yes, the market's down, but are over 9,000 companies really going to go to zero? I think it's really much more easy to overcome that sort of emotional roller coaster when you have that baked in diversification. So I think that's really why a lot of regular people find themselves attracted to the Boglehead passive index fund investing mentality. I think for most people that don't sit there and enjoy reading financial statements and looking over 10Ks and looking at historical financials and seeing what the latest analyst projections are and whose eyes glaze over with that kind of thing, I think something like index investing, Boglehead style index investing, is probably a really good fit. It's simple to do. It's easy to understand the benefits of it, and it takes a lot of the emotion and stress and whatever out of the process. So that's kind of my take on Boglehead investing. Now, I personally am one of these kind of weird nerds that actually enjoys looking at the financials and trying to find the mispricings in the market and yada yada. And I also have pretty good control over my emotions, and so that's why I do, sit here and I pick individual stocks. I also kind of like the hunt, like the challenge, and like seeing if I end up being right or wrong. So let me know what you think in the comments below. Do you prefer a Boglehead style of investing, or do you also enjoy picking and choosing, looking for mispricings in the market, enjoying the thrill of the hunt, and seeing in the long term if you're right or wrong? As always, like and subscribe, hit the join button, hit the Discord button. We've got links to all that stuff below. Love to hear from you. Take it easy. Have a wonderful afternoon.